Did you know that according to Chamath Palihapitiya, the upcoming Tesla stock crash will change this generation? It is a well-known fact that Tesla is the market leader in the electric vehicle industry, and people are anticipating more innovations from the company. Make sure to stay tuned and keep watching to find out what Palihapitiya meant. Innovation is what makes the world move forward. The invention, evolution, and innovation of things signal change and improvement from what people are used to. In line with that, Tesla is known as a company that introduces a lot of innovations in different aspects and different areas. Today, senior executive at Facebook from 2007 to 2011. CNN describes him as the founder and CEO of Social Capital, whose mission is to advance humanity by solving the world's hardest problems. With an estimated net worth of around $1.2 billion as of April 2021, Palihapitiya is ranked 2378 on the Forbes list of billionaires for 2021. Social Capital was founded to invest in companies in fields being ignored by other venture capitalists like health, financial services, and education. The firm has since expanded to invest in tech companies like Amazon, Tesla, and Slack. Palihapitiya is a known Tesla bull, and he said that Tesla stock has a bright future and will be worth double and even quadruple in the years to come. He also said that Tesla is a clean energy firm that will possibly overpower the fossil fuel industry, which will eventually allow Tesla stock to overperform, allowing a much bigger opportunity to make its way up to $10,000. However, despite being a Tesla bull, he cannot ignore the fact that the present state of the economy is not at its best. Palihapitiya said that the thing that you have to do before you talk about what is happening now is go back and start at the end of the great financial crisis. The reason is that there were a bunch of people coming out of the GUF who were confused about what the US government and some European governments were doing. The global financial crisis, or GUF, refers to the period of extreme stress in global financial markets and banking systems between mid-2007 and early 2009. He said that at the time there was the risk of a huge financial contagion, and so they stepped in and the Fed started using its balance sheet to buy toxic assets. The Fed, or Federal Reserve System, is the central banking system of the United States of America. It was created on December 23, 1913, with the enactment of the Federal Reserve Act after a series of financial panics led to the desire for central control of the monetary system to alleviate financial crisis. In line with that, a lot of governments did it, and then there was a body of people who coined the modern monetary theory, which in simple terms is like saying, hey, you can keep printing money and introducing it into the economy to smooth things out and to drive long-term growth by definition. Modern monetary theory, or modern money theory, is a heterodox macroeconomic theory that describes the currency as a public monopoly, and unemployment as evidence that a currency monopolist is overly restricting the supply of the financial assets needed to pay taxes and satisfy savings desires. This theory states that government spending should not be restrained by fears of rising debt. It turns out that several government officials fell for it, but it does not address the opportunity cost and distributional consequences of the monetization of deficits by the central bank, its impact on asset prices, which may affect both the demand and supply sides of the economy, and therefore the inflation constraint even before full employment is reached. Palihapitiya said, fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about $30 to $35 trillion of money into the economy that should have never been there. So the thing to remember is that we have not necessarily just been obfuscating true supply and demand in the last 6 or 8 months when we've been talking about a recession or inflation. We've been actually doing it since 2008. It's just that it's been building up in the system. Do you think Tesla stock is worth buying today? Share your thoughts in the comment section below. According to Palihapitiya, people have to realize that all of that money somehow needs to get destroyed in some way, shape, or form if a true economic equilibrium is meant to be found. He added that what is true supply and true demand in the absence of government sloshing money around trying to prop up things that should not be propped up, buying votes, or all the other grifts these folks have engaged in the last decade and a half have to get undone. Palihapitiya said that if you think about taking $30 trillion out of the global economy, it is equivalent to $85 trillion in world GDP, so it's almost half of an entire year's worth of global GDP. He said that it will take around 3 years of the slow, meticulous running off of money instead of reintroducing new money. He said it seems like we're at the beginning of something that's going to be long and drawn out, and that's separate from whether we're in a recession or not. That's just the bear market that we're in, according to Palihapitiya. The CPI, or Consumer Price Index, for the next 3 to 5 months will probably be very bad. He said that there are a handful of components that have gotten completely run away first, and probably the biggest one is rent. Rent works on a 3-month lag, and he said we're going to reintroduce what the true owner's equivalent rent is into SPE, so that we can already forecast that supply is going up with oil worth $105 a barrel, and Russia is basically trying to break the Bank of Europe by now messing with their nat gas supplies. Furthermore, the German energy minister said that if that happens, it could be a contagion equivalent to Lehman Brothers with respect to energy Lehman Brothers Holdings. Inc. was a global financial services firm founded in 1847. Before filing for bankruptcy in 2008, Lehman was the fourth largest investment bank in the United States with about 25,000 employees worldwide. Palihapitiya said that by playing all of these things out, what you have is rampant runaway costs, and those have no mechanism to get back in check in the absence of some real governmental changes in the policy, especially in terms of the Ukraine-Russia war, and how the government intends to either work or cooperate or fight with China. Inevitably, all of these things have to get solved in the absence of that. Prices are going to continue to go up. That said, people start to wonder what will the Fed do about this. Palihapitiya believes that the Fed will overcorrect because there is so much pressure for them to act. All roads, I think, lead to lower equity prices, says Palihapitiya. While Wall Street announced record earnings this year and predicted earnings to continue to go up next year, Palihapitiya thinks otherwise. He said, how do you see earnings continuing to go up into these prints like this when you cannot pass through 80 to 90% increases in energy and COGS and whatnot? You'll have to sell fewer things because there will be fewer people with jobs to buy things. Palihapitiya thinks that Wall Street is wrong on that account and believes that earnings are going to go down this year and will definitely go down next year. Contrary to what Wall Street claims, I think what probably happens is that the entire world of equities needs to get repriced at a lower price. Still, despite the threat of a recession, it does not seem like it will significantly hurt Tesla stocks. In fact, Tesla's business is expected to hold up much better compared to other automakers. Tesla has previously guided for over 50% delivery growth over a multi-year period, while indicating that it could approach 60% growth this year, which signals that demand growth should hold up even in the event of a downturn. Moreover, economic indicators do not point to a very deep recession this time around, with household savings rising post-pandemic and banks also remaining well capitalized. Make sure to visit our channel and watch our other videos for more Tesla stock content.